Actually, Nicholas was right that I joined Bank of China Hong Kong in 2008. That is actually, I joined BOC Hong Kong in 2001, and then I went to Beijing to work for Bank of China, the parent bank, in 2005, and came back in 2008. So here I am. Distinguished guests, ladies and gentlemen. Let me find the, yeah, there we go. Good afternoon. I'm glad to have this opportunity to share with you the recent development of the offshore renminbi markets and my views on the premier role that Hong Kong can play in the process of renminbi internationalization. Since its opening up and the initial market reforms in 1978, China has experienced robust growth and became the second largest economy in the world in 2013. China's fast-growing economy helps facilitate its integration and closer trading relationship with the rest of the world. In 2013, last year, China surpassed the United States to become the world's largest trading nation. This is a landmark milestone in China's foreign trade history, reflecting its rising economic status and global influence. In the meantime, its financial systems have been undergoing major reforms in steps, building an important foundation for renminbi to go global. As a result, renminbi has been more widely used and gaining more international characteristics. According to SWIFT, renminbi was ranked number 7 as the most used payment currency. It was also ranked the second, number 2, as the most widely used trade finance currency, and number 6 as the number 6 largest foreign exchange trading currency by the end of September this year. A currency's function include payment, investment, and reserve. In this respect, renminbi is now making significant progress in fulfilling all these functions and proceeding from a widely used payment currency to an increasingly popular investment tool and alternative reserve currency for central banks around the world. As you may have known, the cross-border renminbi policies under current account have been liberalized since 2012. All companies in China with import and export qualification can now make and receive payments in renminbi for goods, services, and other current account transactions with their global counterparts. In the first 3 quarters of 2014, the total volume of renminbi cross-border trade settlement reached 4.82 trillion renminbi, up 53% year-on-year. In fact, renminbi cross-border trade settlement now covers more than 98% of the countries and regions in the world. 25% of the cross-border merchandise trades between China and other regions were settled in renminbi in the first 9 months of the year, of which the majority was settled via banks in Hong Kong. This reflects again Hong Kong's important role as a global hub for cross-border trade settlement in renminbi, serving both local and overseas banks and companies. This chart shows the growth of the true offshore international renminbi payments. When I say true offshore international renminbi payments, I mean those transactions taking place between offshore renminbi centers, such as Singapore, United Kingdom, Luxembourg, etc., without involving China and Hong Kong. Over the past 2 years, the international renminbi payments between these offshore trading centers have grown by 837% in value, compared to the growth of 378% for all currencies. It is evident that renminbi is gaining its importance as a medium of exchange or payment internationally. With the development of renminbi as a payment currency, there are also increasing demands for renminbi investment. The central government has introduced different policies under capital account to facilitate the renminbi funds flowing into and out of the mainland in an orderly and controlled manner. This helps expand the development channels. This helps expand the deployment channels of the accumulated offshore renminbi funds. The first channel is to allow several types of institutions, including overseas central banks or monetary authorities, overseas renminbi clearing banks and participating banks in renminbi business, to invest into the mainland's interbank bond market using renminbi, starting from 2010. These allows designated institutions to buy onshore bonds under a quota system and promote the international use of the renminbi in portfolio management. The second channel is the use of renminbi in ODI and FDI. ODI stands for Overseas Domestic Investors, i.e. mainland Chinese companies making investments overseas, and FDI, foreign direct investment into China. The policy was first launched in 2011, and in the first 3 quarters in 2014, this year. Cross-border direct investment in renminbi, including both ODI and FDI, reached over 720 billion renminbi, up 117% year-on-year, much faster than the growth rate of cross-border renminbi trade of 55%. The third channel is the renminbi Qualified Foreign Institutional Investors Scheme, or simply put, the RQFI. The scheme was first piloted in Hong Kong to allow securities firms and fund houses to invest offshore renminbi funds in the mainland's equity and bond markets. It was then expanded to other countries like UK, Singapore, France, Taiwan, etc., with total quota of 770 billion renminbi. The RQFI scheme is well received in Hong Kong, as the quota of 270 billion renminbi has all been used up recently. The fourth channel is the offshore renminbi financing, i.e. renminbi loan and bond business. Renminbi loan business has been developing gradually in Hong Kong with outstanding loan balance of 167 billion renminbi at the end of September 2014, up 44.3% year to date. Offshore renminbi bond is an alternative source of financing for mainland institutions, as well as an important investment asset class for global investors. The third important function of a currency is as reserve currency for central banks. With no doubt, US dollar and euro are currently the two most important international reserve currencies. Renminbi is rising to that status of being an alternative reserve currency for central banks. Since 2009, PBOC, the People's Bank of China, the central bank, has signed bilateral currency swap agreements with 28 countries or regions, totaling 3.1 trillion renminbi, serving as a backstop renminbi liquidity facility in these countries or regions. These swap lines not only help promote the use of renminbi in global trade and finance, but also avail more central banks of holding renminbi as an alternate reserve currency. Until now, it is reported that at least 50 countries or regions' central banks or monetary authorities have already made investment in renminbi assets. Among them, 29 central banks or monetary authorities announced that they had bought renminbi bond or renminbi assets with total amount of 140 billion renminbi. These, again, helps renminbi gain reserve-like attributes. Now, I would like to talk a little bit more about how the establishment and growing of offshore renminbi bond markets help enhance the overall competitiveness of Hong Kong's financial market. As one of the few most important international financial hubs, the lack of a mature and sizable bond market has been the soft spot and structural problem for Hong Kong. Since the first offshore renminbi bond issued in Hong Kong in 2007, the offshore renminbi bond market has developed rapidly, with more diversified types of issuers and investors. In the first 3 quarters of 2014, the total offshore bond issuance reached more than 164 billion renminbi, far exceeding last year's total issue. The most important backbone to develop this renminbi bond market in Hong Kong is the support from central government, especially the Ministry of Finance, state policy banks, and some other major financial institutions. Sovereign issuance has been taking more significant portion in the offshore renminbi bond market. The Ministry of Finance of China has issued sovereign bonds in Hong Kong for 7 consecutive years, with the record high new issuance of 28 billion renminbi in 2014. In addition, the mainland policy banks and supranational organizations have been issuing renminbi quasi-sovereign bonds every year in recent years. For example, renminbi sovereign bonds and quasi-sovereign bonds together accounted for more than 30% of total offshore renminbi bond issuance in 2014. Recently, we have seen increased diversification in the offshore renminbi bond markets. Chinese corporates and some foreign multinationals are active in bond issuance. Even some foreign governments are also actively engaged in this rising market. For example, British Columbia Province of Canada issued 2.5 billion renminbi one-year bond at a coupon rate of 2.25% last November. The UK government has issued a 3-year renminbi 3 billion sovereign bond to finance its reserve. Another interesting development in 2014 is its expansion to more offshore markets other than Hong Kong. So far, about 11 non-Hong Kong offshore regions have issued offshore renminbi bonds, including Frankfurt, Sydney, Luxembourg, Paris, Seoul, Dubai, Malaysia, and Switzerland, totaling 146 billion renminbi. The rapid growth of a sizable renminbi bond market will be a major contributor to the establishment of a mature bond market in Hong Kong, enhancing its competitiveness as a regional and international financial center. Now, I'll spend some time to talk about Hong Kong's roles in the offshore renminbi market. Since China's economic reform beginning 3 decades ago, Hong Kong has been playing an active role in facilitating the opening up and reform of the mainland economy. The process can be divided into 3 stages. In the 1980s, the first stage, Hong Kong's economy started to integrate with the mainland. A lot of Hong Kong firms relocated manufacturing activities to Guangdong province to take advantage of lower labor costs. What we call front shop, back factory model gradually took shape, and Hong Kong provided high value-added services for industries in China. Since then, the industrial development of Guangdong province has grown exponentially, and the region has become one of the most important export bases of China. Hong Kong has then been the key conduit for international trade with China. Currently, about 30% of China's trade is intermediated through Hong Kong. In the second stage, Hong Kong became the major provider of professional and financial services to support the business development in the mainland. Meanwhile, mainland enterprises used Hong Kong as a springboard for their overseas expansion and also started to list on the Hong Kong stock market in the 1990s to increase their exposure to the international markets. There are now about 800 companies from China listed on the Hong Kong Stock Exchange. In addition, mainland companies have significantly stepped up overseas acquisitions and direct investments. ODI from the mainland to Hong Kong reached $63 billion, accounting for 58% of China's total ODI in 2014. Hong Kong is also the largest source of FDI in the mainland, representing more than 50% of the total for many years. Given its close social-economic ties with the mainland, Hong Kong naturally became the best trading ground to roll out policies for facilitating RMB internationalization, which was viewed as the third stage of development in the past decade. Hong Kong has been playing a crucial role and achieved great success in this regard. The first offshore renminbi clearing bank was appointed in Hong Kong back in 2004, that is Bank of China, Hong Kong. Offshore renminbi bond, cross-border trade settlement, RQ fee, etc., were all initiated and cultivated in Hong Kong. Recently, the launch of Shanghai Hong Kong Stock Connect is another good example, which I will elaborate further. Sorry. Now, after 10 years development, Hong Kong has been a well-established offshore renminbi center. The majority of cross-border renminbi trade were conducted through banks in Hong Kong, with the largest offshore renminbi liquidity pool, which is about 1.2 trillion renminbi today. Renminbi funds in Hong Kong are more than sufficient to fulfill the local needs. The surplus liquidity is channeled to other offshore renminbi markets to support their financing activities. As a wealth management center and a CNH trading center, CNH means the offshore renminbi exchange rate trading market. Hong Kong provides a wide range of renminbi-denominated financial products to meet the different needs of investors around the world. Hong Kong is a premier offshore clearing center with a global platform and comprehensive coverage. The financial infrastructure in Hong Kong plays an essential role in facilitating renminbi cross-border and offshore transactions. The core of Hong Kong's renminbi financial infrastructure is supported by the renminbi real-time gross settlement system, or simply put, the RTGS. This allows the renminbi clearing bank to provide reliable and efficient renminbi clearing services to financial institutions all over the world. In the first 10 months of this year, the renminbi RTGS transaction value reached 1.36 trillion renminbi, 70% higher than last year's total. As of October 2014, there are 225 banks participating in the Hong Kong renminbi clearing platform, and of which 76 banks are from other regions. The clearing network now covers around 30 countries in 6 continents. Recently, Hong Kong's renminbi clearing bank has further extended the service hours to 20.5 hours, which is the longest daily service around the world, to better cater to the growing business needs in Europe and America. The data from SWIFT show that in the third quarter of this year, 73% of global renminbi payments are conducted through Hong Kong, reflecting Hong Kong's importance as a major offshore renminbi hub. As PBOC appointed several more renminbi clearing banks in other countries, more offshore renminbi centers are developing. Each of them could have unique positioning. Under this development, Hong Kong will certainly face increased competition. Nevertheless, competition among different regions can facilitate these offshore renminbi centers to optimize their services and drive product innovation. This, in turn, will drive the overall development of offshore renminbi business globally. Hong Kong, as a major offshore renminbi hub, will definitely be able to benefit from this bigger pie. Compared to other newly developed offshore renminbi markets, Hong Kong has a 10-year first-mover advantage and has already become the largest offshore renminbi center in terms of scale, depth, and breadth, with robust and efficient financial infrastructure. Another important unique feature that Hong Kong enjoys is an existing rich and excellent talent pool, which consists of not only local professionals in banking, accounting, and legal fields, but also many cross-border talents with good knowledge, experience, and network domestically and internationally. These talents have been the crucial building blocks, and they will continue to provide professional services to facilitate the further growth in the offshore renminbi market in Hong Kong. I believe Hong Kong will continue to play a vital role in strong overseas renminbi business development and more clearing banks in different regions. It can act as a hub to link all offshore renminbi centers in different regions together. Every offshore renminbi center can then leverage its own strengths to further grow and promote the overall development of the global offshore renminbi business. In addition, Hong Kong's status as the testing ground for China to go global and as the gateway for overseas investors to access mainland China markets will be further emphasized as well. Finally, we expect some recent new policies will bring further and even more opportunities in the foreseeable future for Hong Kong. The year 2014 is another year of achievement in the offshore renminbi business. On November the 17th, the Shanghai-Hong Kong Stock Connect scheme was officially launched, and the daily renminbi conversion limit for Hong Kong residents was lifted. Moreover, renminbi financing is also allowed to be provided to Hong Kong residents. These significant developments serve as catalysts for the further growth of the offshore renminbi market, strengthening Hong Kong as the premier global renminbi hub. The Stock Connect scheme further opens up China's capital markets by allowing a mutual access to the mainland and Hong Kong stock markets. The use of renminbi as the investment currency in the scheme provokes the two-way flow of renminbi funds between the offshore and onshore markets. The scheme also opens up a new channel for the offshore investors to invest in the mainland stock market, in addition to the RQF schemes. Moreover, the scheme can enhance the cooperation and communication between Hong Kong and Shanghai, strengthening the partnership in the two capital markets. In my view, it also shows that the central government continues to position Hong Kong as the best platform to facilitate renminbi internationalization. The operation of the Stock Connect scheme has been running smoothly. We at Bank of China Hong Kong have been playing a major role in this Stock Connect scheme, including being the designated bank of the China Securities Depository and Clearing Corporation Limited, i.e. Being the sole clearing bank for this scheme. We strive to provide quality and efficient financial services to support the development of Shanghai-Hong Kong Stock Connect. We also look forward to the coming of Shenzhen-Hong Kong Stock Connect, the opening up of another stock market of the mainland. We remain committed to providing full support to the launch of the Shenzhen scheme in the, I wouldn't say near future, I would be disclosing things too much. It will be sometime down the road. The lifting of the daily conversion limit for Hong Kong residents is another important development for the Hong Kong Offshore Renminbi Center. It not only provides convenience to trade Shanghai A shares through the Stock Connect, but also helps facilitate the development of more diversified renminbi products and services to meet the needs of customers and investors. During the first week after the limit removal, some customers bought more than 10 million renminbi in one go and invested the funds into some renminbi-denominated products. Customers can now easily capture the renminbi investment opportunities. In addition, as the restriction of renminbi financing to individuals is relaxed, banks are able to provide new renminbi financing products to individuals, including renminbi mortgage, renminbi personal loan services, as well as A-shares margin trading service under the Stock Connect scheme. These provide additional options for individuals if they are in need of renminbi funds. To conclude, renminbi internationalization is gathering pace. Hong Kong is the most well-established offshore renminbi center and has lots of professionals with in-depth expertise in the renminbi business. The new policy relaxation will definitely have positive implications on Hong Kong's further development. By assisting the mainland in the process of full renminbi capital account convertibility, Hong Kong can further develop and reinforce its position as the world's premier offshore renminbi hub going forward. That ends my presentation. Thank you very much.
Thank you, Jason. Very comprehensive introduction and explanation of the situation here. Hope you don't mind being a moderator for the first section afternoon. I hope I have the benefit to ask the first question before everybody. It is a question of myself, but always being asked by friends around, particularly from overseas, which is, with China now establishing a lot of links and clearing arrangements around the world with many cities, as indicated by Jason's chart just now, does it mean that Hong Kong's offshore RMB center position will be diluted? Are they diluted by market means or diluted because of the policy choice?
When Nicholas said he would ask the first question, I would expect a pretty tough question. Obviously, it is. I think first of all, there is a need for a renminbi clearing, offshore clearing center because of the long convertibility of renminbi so far. Obviously, ultimately, when renminbi becomes fully convertible, the need for a cross-border clearing and settlement bank may ultimately go. But before that, there is still a need for a channel to clear cross-border renminbi transactions. And in that regard, we believe Hong Kong will continue to play a very, very major role. If you look at the renminbi clearing centers that have been set up around the world, some of them, for example, Singapore and Taiwan, has grown quite significantly within a short time. But nevertheless, in terms of the size and the breadth and depth of the market, Hong Kong is still by far the most important part. And in fact, if you look at the day-to-day renminbi clearing settlement transactions that Bank of China Hong Kong does every day, more than 90% of the renminbi clearing transactions are actually transactions conducted between financial institutions outside of China, between institutions outside of China. So it has nothing to do with the cross-border. I think that goes to demonstrate that a successful offshore renminbi center also requires a very efficient infrastructure and also a mature financial market. In this regard, Hong Kong's proximity to China and Hong Kong's talent pool, Hong Kong's rule of law, all counts to continue to maintain that status. As I mentioned in my presentation, actually, given the limited investment opportunities of renminbi assets in Hong Kong, a lot of the surplus renminbi liquidity are actually now channeled to other offshore markets to support their activities. I would believe for so long as Hong Kong can maintain its competitiveness in terms of its efficiency, its cost effectiveness of the renminbi settlement function, the establishment of other offshore markets will only help to increase the pie, to make the pie even bigger. And in that regard, Hong Kong will continue to play a major role.
Thank you. I don't want to exploit my benefit as a moderator anymore, even though there are some interesting questions here. May I open it to the floor first to see any pressing question you have? There are a lot of microphones around. You can just raise your hand or signal your interest. If not, oh, okay, please. This gentleman, yeah.
Well, I'll ask a question, maybe as far as retail renminbi is concerned. You talked about huge amounts there, But for the little investor who wants to diversify its portfolio and buy renminbi bonds in reasonable quantities, not the billions you've been talking about, is there any possibility in banks in Hong Kong? And would that be then local renminbi bonds? I mean, from China, or would it be the so-called how do you call that again? The dim sum bonds, or I've seen also that some, for example, Bank of China Luxembourg issued bonds. But I suppose that was mostly for institutional investors. Do you have anything for retail investors? Thank you.
We do. Actually, if you go to any private bank in Hong Kong or any wealth management centers for high net worth individuals, from time to time, there will be private placing of dim sum bonds in Hong Kong. I think the challenge is not the availability. The challenge is the shortage of sufficient amount to satisfy all these needs for the renminbi bonds. Actually, Hong Kong is a very global market. Theoretically speaking, any issue of a renminbi bond around the world, so long as your private banker can manage, you are allowed to subscribe those issues as well. The question is only, given the limited supply of those bonds, whether an allocation could be made to an investor outside of the jurisdiction of issuance. What we have seen so far in terms of the renminbi bond market is that there are a lot of liquidity. A lot of people simply buy and hold. So it's not that easy to buy in the secondary market unless you are prepared to pay a premium. We hope with the increasing issue of more and more renminbi bonds, both in Hong Kong and in other parts of the world, a more robust secondary market can be developed. And that would certainly benefit the bond market in Hong Kong and benefit the use of renminbi as an investment.
Is there China withholding tax?
The question is whether there is a China withholding tax, not for the offshore bonds.
I think. Friends, I think George, you asked the question to the right people because Jason is in charge of the personal banking. Before the second question on the floor, I think I better fire this question on the paper here, there are two questions which is quite related. This question asks, when the Canadian RMB settlement hub was announced 2.5 weeks ago, it was designated by the PBOC, the Central Bank of China, as the hub to serve North America. What's the significance of this destination? There's another question from a different audience. Do you see RMB threatening the role of US dollar as the world's reserve currency? I don't know whether these two questions are related, but I think somehow you may like to see them is linked. And what kind of impact would it have in the world's economy if there were to happen, or if this were to happen and the USA is forced to balance its trade?
I don't have a crystal ball to see what things will be like in 5-10 years' time. But in terms of the development of renminbi internationalization, obviously the Americas is sort of the last time zone that is covered by a renminbi clearing operation until Canada announces its establishment of a clearing bank in Canada. And given the importance of the Americas in terms of international trade, particularly in terms of the trade between US and China, I think this is obviously a very good development. If you ask whether renminbi will replace US dollars or threaten the position of US dollars as a reserve currency, as a payment currency, as an investment currency, I wouldn't use the word threaten, but I think with the growing influence of China in the world stage, there is no doubt a need for diversification by many countries. There is also no doubt that if you conduct trade with China, both import and export, then the use of renminbi as a payment currency would provide an electoral hedge for your currency exposures. So I think the market will take care of all these developments. I wouldn't say there is any intent on the part of the government to undermine or do anything to take away the position of the US dollars. I think the market will determine what will be the optimum currency for use for payment, for trading, for investment, and for currency. At the end of the day, it should be the market that determines it.
Thank you. Are there any other questions from the floor? Before I fire another 3 linked questions. So switching from the US dollar, there are 3 questions, again, interrelated. First, about the RMB. When do you think the RMB will be fully convertible and transferable? Subsequent to that, with the rapid internationalization of RMB, what will be the role of Hong Kong dollar in the future? And when or whether Hong Kong dollar will be pegged with RMB instead of the US dollar now?
Wow. Again, I don't have a crystal ball. I think there's no doubt that the central government has a stated policy objective of ultimately making renminbi to be a freely convertible currency. There's no doubt on its determination. In terms of timing, I think a lot of that depends on whether the government feels the domestic market is fully prepared for a full convertibility of the currency in terms of the ability of its financial system to withstand risk associated with it. Whether bankers and other financial institutions in the country have enough risk management measures, has enough experienced risk managers to deal with the volatility of the market as a result of that. And I don't have any time frame on that. Hong Kong dollar will definitely continue to have a role for so long as Hong Kong people need to spend money in Hong Kong. And I think whether or not Hong Kong will depeg from US or whether Hong Kong dollar will go, ultimately it's not a question for me. Again, it's a question for the market and for you people on the floor.
Thank you, Jason. Any other questions from the floor? Before I fire another one. Thank you for being generous to me. I have one somewhat sensitive question, which was asked during the lunchtime to another 2 speakers. What do you think about the Occupy Central towards our Hong Kong status as our premier offshore RMB center? Positive, negative, neutral, whatever.
I better be careful in answering this question. I think there's no doubt that the Occupy Central has already caused some issues with the retail sector. Spendings of our credit card holders in some of the brand name shops in the affected areas down by as much as 40 to 50%. But I would expect this impact would only be temporary. if hopefully the occupation can be resolved peacefully, and the economy will bounce back. Obviously, the occupation has been a challenge to Hong Kong's rule of law, and the rule of law in Hong Kong is the very cornerstone of our success in the past and will continue to be in the future. And therefore, any attempt or any activity that undermines Hong Kong's rule of law will certainly not be a good sign. And hopefully, this will again be a temporary feature and that will pass away. And to some extent, you might say the Occupy movement somehow highlights the importance of rule of law, and people are now talking more about this than before. But I think the movement itself brings out other issues which deserves greater search of our soul. And I would say the bigger question is Hong Kong people aware of the positioning of Hong Kong amidst the global economy among the Greater China and the Asia region? The success of Hong Kong has always been based on a lot of the core values that people mentioned. But if you look closer, a lot of these are intermediary activities. The size and population of Hong Kong by itself will definitely not be able to support the size of our GDP today. So a lot of our wealth, a lot of our business are generated as a result of Hong Kong acting as an intermediary between China and the rest of the world and between different parts of Asia. And for that reason, as an intermediary, you have to maintain an amicable relationship. You have to maintain a business-like relationship with your business partners. Some of the views being expressed recently seems to not point to those directions. Rather, they are pointing to contrary, opposite directions, which kind of worries me. Are we aware of our position in the world? Are we aware what has brought the prosperity and the standard of living that we enjoy today? And are we undermining a lot of these fundamental issues, and in so doing, impacting the long-term development of Hong Kong? I would rather look at the implications to the long-term development of Hong Kong as a bigger concern. The impact on the retail economy will bounce back sooner or later, as soon as the movement stops. But if Hong Kong people are not fully aware of our strengths and our weaknesses, then that worries me.
Thank you so much, Jason. If I may borrow something from Jason before our entering this hall, which is actually very inspiring in his remark. He said that so far, if you watch the Occupy Central movement, both sides have paid very strong emphasis to follow the law. And so far, court orders are being effectively, I won't say efficiently, enforced or being followed or implemented. So that gives you an understanding of how important the rule of law here in this society. I think this is particularly important from Jason, who is a director of the Financial Dispute Resolution Center and holds a law degree from the UK as well as from Canada. Without further ado, I don't know whether someone will want to take the last chance to ask the last question. Still leave it with me. Okay, let me take the last question. Same as the first one, with the development of more and more different offshore centers, there are also simultaneously a development of free trade zones in China. So some people, they get the impression that this free trade zone could also dilute Hong Kong's offshore RMB center position. Is it true?
I think there's no doubt that the establishment of the free trade zone in Shanghai also acts impetus to the renminbi internationalization. It allows corporates incorporated within the free trade zone to be able to access the offshore renminbi market, particularly to borrow renminbi funds, which, as we all know, right now the offshore funding costs in renminbi is still lower than in China. In that regard, you might say it competes with Hong Kong as a source of funding, as a funding center. But that being said, Hong Kong continues to enjoy a lot of benefits in terms of our financial infrastructure, the sophistication, the complexity of the financial market in Hong Kong, the availability of treasury products more readily available in Hong Kong, the availability of talent pools in lawyers, in accountants, all help to continue Hong Kong's role as the major offshore hub for renminbi. I think in that regard, Hong Kong and Shanghai is complementary of each other. Shanghai is closer to the mainland market, but for so long as there is a barrier for flow of funds between China and the free trade zone, in other parts of China and the free trade zone, then the development of Shanghai Free Trade Zone would still be limited by these policy constraints, and Hong Kong will continue to play a significant role.
Thank you. Let's give a big pause to Jason for his insightful and informative presentation and dialogue. Thank you very much.